My name is James Ramelli, and what we're going to talk about today is how to swing trade Apple, Amazon, Google, Netflix, Tesla, and Twitter. I'm actually going to show you a couple of day trade examples as well. Now, this might seem like a rather narrow topic, but what do you guys think, if anything, do those names that I have right here, Apple, Amazon, Facebook, Google, Netflix, Tesla, and Twitter, all have in common with each other? It's a lot of tech, but it's not the answer. What is the common thread that runs through these stocks that we're looking at here? What do they all have in common, right? So, yes, volatile. High volatility, high price names. They move a lot. Momentum names. We call these stocks that swing a lot. High beta, right, exactly. So, while we might be focusing on these names here, the ideas and concepts that we're going to cover are going to be ideas and concepts that can be applied to really any stock that you might fit into that category of high volatility, momentum name, trades a lot of volume, very liquid, closely followed, very well watched stocks. Okay, so before we jump in to the main part of our presentation here, I have to do our boilerplate risk disclaimer. Day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and/or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker or RIA for execution margin and all other capital requirement questions. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and keenonthemarket.com. All right, so pretty standard. I could probably read that in my sleep, but we do have to do it. As Reed said, my name is James Ramelli. I'm an active trader in futures, forex, stocks, commodities, and options. Options should probably be the number one thing on that list because 97% of all my trades are in the equity options market. I am regularly on CNBC, Bloomberg, Fox Business, BNN Canada, SIBO TV, and I also write for Futures Magazine, Active Trader, Resource Investor, CME Open Markets, and a number of other online publications. So if you haven't seen me on TV, perhaps you've read something that I've written in the past. That's not really what's important. Enough about me. Let's talk about swing trading. So we have a general goal here for all of our trading plans that we put together at keenonthemarket.com, and it's to provide fresh trading ideas, maybe different ways of looking at things that you haven't considered before. I'm sure everyone in this room has at some point traded one of those stocks that is on that list, right? They're extremely popular. They're friendly to traders because they have very tight markets and they're very liquid, right? But what we want to do is teach you how to be successful as a day trader or a swing trader, or both, right? How many people in this room would consider themselves to be strictly day traders? Meaning you go home and cash every single night, you never carry a position overnight, and all of your trades are wrapped up by the end of the day. Yes, yes, some of you yes. Okay, well, how many of you would consider yourself swing traders where you are looking at a trade and you know that when you put this trade on, you're going to be in it for a couple of days, a couple of weeks, maybe even a couple of months, okay? So a lot more of you would seem to consider yourselves swing traders, okay? So there is, there's background chatter. I'm not sure what that would be. It should be fine. So if you are a swing trader, you fall into a pretty broad category, and I think that that term swing trader is used kind of ambiguously because what really makes someone a swing trader? What really makes a trade a swing trade? If I buy something today and sell it tomorrow, it's not a day trade, right? But is it really a swing trade either? So what we're going to look at here is swing trades that are more in the realm of something that I'm going to have on for 2 weeks to as far out as 6 months, right? Pretty wide range. Anything about outside of that 6 months, we would probably consider to be a longer-term investment type trade, okay, or a position. So the whole idea behind the trading plans that we write is to put probability in your favor. We've traded thousands of stocks with mixed results, but we only teach and educate our traders with what makes us money over time, right? We're not going to develop a trading plan that consistently loses money and then try and present it to you guys, because we're not going to be trading that trading plan, right? It wouldn't make any sense for us to keep with it. If we've developed something that we find out works well and we trade with it using our own capital, then we're going to show it to you guys, and then we're going to tell you guys about these ideas and plans that we have developed. Basically, we are your guinea pigs in the trading world. We risk our own money, get some results, and then present to you guys what those results are here. So we risk our own capital, not yours, to develop these type of trading plans. Okay? This is really important. And this is central to all of the trading plans that we're going to talk about, but it's particularly important for this specific trading plan that we're going to talk about today, okay? And this specific trading plan removes all emotion from trading because it presents kind of step A to Z actions for any type of signal and situation, which means I'm never going to have to make a decision after entering the trade other than where I put my stops, where I put my profit levels, and then I'm done, okay? The key to trading success is emotional discipline. Paul Tudor Jones said that. And if you don't know who Paul Tudor Jones is, give him a quick Google. An extremely successful, extremely wealthy investor, right? We try and teach plans that help traders stick to that type of mindset. Meaning we're going to teach methodical and systematic trading plans that help a trader take control of their emotions in winning and losing setups, okay? You might be able to exit a losing trade at your predetermined stop level and not let emotions cloud your judgment and, you know, guide you to lose more money than what you may have originally been willing to lose. But a lot of traders also have the same difficulty when it comes to managing a winning position, okay? Meaning when they have a trade that moves in their favor, they don't really know when to exit, and they can tend to get greedy and hold things longer than they necessarily should have, right? So the trading plan that I'm going to tell you guys and present to you here is never going to leave any room for doubt or error as to when you should be exiting positions or when you should be putting in stop losses, okay? It removes the emotion. It's kind of a setup to trade. It works out, it works out. If it doesn't, then it doesn't. But there's no room for kind of the discretionary moving around of stops or the discretionary moving around of profit targets. Everything is set on the entry of the trade. And I write and plan all of my trades the exact same way because it makes it much more easy for me to stay disciplined. How many of you out there say that, you know, you have trouble, you know, leaving your stops in place once you enter a trade, or not even that you have trouble, but where you have moved your stop to a level that you didn't initially intend it to be at, meaning you decided to let a trade have a little bit more room than what you initially wanted, or you let a trade run for a little bit more against you than what you initially thought you would let it, right? It's easy to do that, okay? It's easy to do that when you don't have a plan in place. So let's first talk about day trading here, okay? So what is a day trade? We say win, lose, or draw for all of our day trades, WLD. That means that at the end of the day, the trade is closed regardless of whether or not it is a winner, loser, or a draw, meaning that it did not make any money. Yeah, I mean, I'm not so sure what the problem with the microphone might be. I've used it all day and it seemed to work just fine. I guess maybe could suggest turning your audio off and turning it back on. I'm not sure. I'm not really sure what to tell you guys about that. So, my favorite stocks to day trade are Apple, Alibaba, GoPro, Facebook, Tesla, Twitter, Amazon. Okay, like we said, those are all of those momentum names, right? Those are the names that tend to trend well. Okay, 80% of the time, a stock puts in its high or low for the day within the first half hour of the trade. Okay, and that's a statistic that you can go and look up. So that means that when I put on a trade, I want to be entering the position in the first half hour of the day, all right? And the trading plan that we're going to look at here actually has me put to a decision within the first 5 minutes of the trading day on whether or not I'm going to be taking a setup, okay? Because I want stocks that trend well. The majority of days in the equity market, a stock is going to trade in a trading range, okay? But we're going to look for stocks that are momentum movers that trade and trend well, okay? So let's take a look at an example here. So who here knows what this set of lines and shaded areas is on this chart right now, okay? Who can tell me what this is called? It's my absolute favorite technical indicator. Yes, it's the Ichimoku Cloud. It's my favorite technical indicator because it's so dynamic and has such a broad range of applications for any type of trading setup. So we're going to look at day trades and swing trades, and the Ichimoku Cloud is central to both of those trading plans, okay? So here we have a day trade setup, a short setup in Apple on the 5-minute bar. If you take a look here, this is from January 8th, 2015. And what we have here is a pretty easy to read short signal on the open. For those of you who don't know what the Ichimoku Cloud is or have never used it in the past, let me break it down for you very simply here. I can spend the next 3 hours talking about the minutiae and the finer details of the Ichimoku Cloud, but for the purposes of this trading plan, because it is very simple and can be used by any trader, think about it just like this. Anything that is above the shaded area here is trading in bullish territory. Anything that is below it is trading in bearish territory. And this trading plan works very, very simply. Okay? I want to be trading the same direction as the close of the first 5-minute bar on the cloud in those stocks. So when I look at Apple here, closing this first 5-minute bar all the way on the left-hand side of the chart, I know that I want to be selling the close of that bar because we're closing below the Ichimoku Cloud, and then developing my stop losses and profit targets using the trading plan, okay? Go back and take a look at the stocks that we just talked about, the stocks that I had on the title page of this presentation, and look at the 5-minute bar and how it plays out every single day in the day. That a trading plan as simple as looking at where this first 5-minute bar closes in relation to the Ichimoku Cloud is extremely powerful and can be very profitable over time if I know how to manage the trades properly, okay? So I also want to say that anyone that has any questions as we go through this about anything at all, please, please, please interrupt me and ask the question. I would much rather stop and re-explain something than try and go through a topic that maybe you guys are a little confused on, because I guarantee you that with the number of people that we have in here, any one question that one person has, there's at least 10 other people with the exact same question who are not willing to actually speak up and say something. So please, I'd like to clear anything up before I move forward with people who are confused, because this plan kind of builds on itself, and your understanding of the most basic parts are relatively important for kind of understanding the broader strokes as well, okay? So what time? So for this chart, I'm looking at the 5-minute bar. This is the 5-minute bar. So for day trades in these stocks, you can just assume that I'm talking about the 5-minute bar, right? There's different time frames that work well depending on the product using the Ichimoku Cloud, but what did we say about these stocks? They're high volatility. They're momentum names. They move very quickly. What time frame is my chart, Chicago or New York? This is, I guess it would be Central Time, because I built the chart here in Chicago. Okay, so for these setups, they move fast enough where I can use a 5-minute bar. No, I'm talking about the very first bar here. This would be the 8:30 bar right in here. The very leftmost bar in the on the chart here is the opening bar. Okay, so this bar right here, that is the opening bar, and that was a bad circle, but I'm trying to draw it on this chart here. Okay, so that's the bar I'm talking about. The close of this very first bar, that is the opening bar of the day. That is where all of my signals are going to come from, okay? So that was the Ichimoku Cloud, okay? I use the cloud every single day, and I use the 5 and 15-minute bars for setups. It all depends on the product that I'm looking at. If I'm looking at any of the individual equities that we've talked about here, then I'm going to be using the 5-minute bar. If I'm looking at indices or futures like S&P futures, the SPY, mini Dow futures, mini NASDAQ, the Qs, the diamonds, then I'm going to be looking at a wider time frame, because those don't trade quite as quickly or trend quite as well as those individual equity names that we were just talking about, okay? So I'm looking at a number of different things on that Ichimoku Cloud, okay? Okay, so a stock, what I said about a stock's movement. So within the first half hour of the day, 80% of the time, a stock has put in its high or low for the day. Okay? That's what I was talking about. So I want to enter in trades in stocks that I expect to trend well. I want to enter into those trades as early as I can. And the absolute earliest I can enter them is the close of the first 5-minute bar of the day. Okay? So not only am I just looking for where the stock closes relative to the cloud, I mean, that is an indicator that I can use and be profitable in the long run. But if I really want to ratchet up my probability of success, well, then I need to take some other things into consideration as well. I need to look at the cloud thickness, the trend of the cloud. I need to look at some other indicators as well, like average true range. Okay, all of those things are going to be indicators and information that I use to determine whether or not a setup really is what we call our all-in setup, right? The setup where every single metric that we look at is pointing to the same conclusion, which in this case would be short Apple on the close of this 5-minute bar, okay? Regardless of how the trade works out, I'm closing the trade by the end of the day, okay? I'm going to close the trade by the end of the day, regardless of how the trade works out. Yeah, we'll take a look at some of that stuff at the end there, Peter. It's very, very easy for me to look at a setup and say, okay, I shorted Apple at the close of that first 5-minute bar today. Here we are in the close right now. It's hit 3 of my 4 profit targets, but I have 25% of the position left. I'm just going to let it hold on to it overnight and see what happens in the morning. Absolutely not, okay? I have different levels of criteria that I use to enter day trades and other criteria that I use to enter swing trades. When I take a day trade setup and then turn it into a swing trade, it's because I'm stubborn and don't want to take the loss or get out of the position, well then I am really, really kind of you know, throwing my trading plan on the ground, right? I'm not following it all. I need to stick to the plan that I know is going to give me the highest probability of success, okay? So some people don't want to day trade, right? And there can be a number of different reasons why they don't want to day trade. Maybe they just can't, okay? To day trade effectively, a trader really does need to have $25,000 or more in their account, okay? And really, in reality, they need to have more than 25 grand, right? The SEC and the NYSE have this rule called the pattern day trading rule, right, where I cannot take more than 3 round-trip day trades in a 5-day period without getting classified as a pattern day trader. If I am then classified as a pattern day trader and my account value dips below 25 grand, then I'm limited to closing positions only and I cannot trade. This is done and put into place to protect traders from just burning through their accounts, okay? From less sophisticated traders that don't know how to day trade. I don't think that the rule is a good idea because I know plenty of traders out there who really know what they're doing who don't have $25,000 in their account, okay? But for those of you that might be in that situation, or maybe those of you who just simply don't want to day trade because, hey, I don't want to sit in front of the screen all day and stare at my positions, or I get too frazzled just sitting around and watching these 6 stocks, biting my fingernails every time I take a day trade. I need something that's a little bit more passive with a little bit wider of a time frame. Well, then you need to be looking at the swing trade setups, okay? And even if you can make money day trading, if mentally it's something that you find to be very stressful, well, then you shouldn't be doing it. I've had customers in the past say, hey, I really like this trading plan, but it makes me feel sick to my stomach. I'm making money. I'm profitable, and I have a knot in my stomach during the day when I'm trying to watch this stuff, right? It just drives me insane. I'm pulling my hair out. Well, once you put yourself in that situation, it's very difficult to put your mind in the right frame to be successful in the rest of your trading and investing, right? So it just means that you need to focus more on swing trades. So a swing trade will have a longer holding period than a day trade, right? A day trade is done at the end of the day. Like I said earlier, the term swing trade is kind of ambiguous because it really covers really wide time frames, right? I might be holding a swing trade for 1 week. I might be holding it for 6 months. Outside of 6 months, this becomes more of an investment or a quote-unquote position, okay? So once I am involved in something like that, then I'm not really trading anymore, right? I'm a buy and hold type of trader. I'm investing for my retirement or for my future, right? But anything inside of 6 months to 1 week would be considered a swing trade, okay? So if I'm going to trade using the options market, I need to know which options I should be using, okay? If I have a signal and I want to hold this position, I'm going to use options that are 3 to 6 months away from expiration, okay? Why am I going to do that? One, the time decay is not going to be as aggressive as if I'm using something that expires in a week, okay? That way, it also gives me enough time to let this trade work out in whichever direction I chose to put the position on it, right? A position might not work out right now, but there is so much time left that the trade can still play out in my favor, right? I've had plenty of positions that I've had on for 6 months that were losers for 6 months, and then in that last month before expiration, they played out and worked out in my favor, and I made money, okay? So positions might not work out right now, but if I'm swing trading and using options that have enough time, then they can still work in my favor. I buy myself enough time for me to be right, for my thesis to play out, okay? These are the trades that I will add to even if they are currently losing. Generally speaking, I never add to losing positions, but if I know that I have a lot of time left and my other metrics and signals are still holding true, I can add to this type of position if it goes against me, okay? So we talked about this a little bit. There are reasons to day trade, and there's reasons why traders can't day trade. Not all traders are in front of the screen all day long. Not all traders want to trade actively during the day. But the biggest one is probably this. The pattern day trading rule requires you to have more than 25 grand in your account if you're going to be trading marginable securities to be an active day trader, okay? So how many of you out there would like to day trade but maybe, you know, don't quite meet this pattern day trade rule, or you've had experiences in the past where this pattern day trade rule has kept you from trading how you really want to during the day? I'm sure, I would guarantee that there's more than a few people in the room that have in here right now that have had this problem. Yes, several people saying that they've had this issue, right? So, you know, you can use the same technical indicator that and system that the Ichimoku Cloud and our swing trading system has to take very similar setups. They're just going to be on a longer time frame, right? And they're going to be more in line with what, you know, your account balance lets you work with, right? I don't want to put myself into a situation where I'm forced to hold something overnight because I don't want to exit it and burn another one of my day trades and then, you know, be thrown into this classification where I then have to worry about keeping my account balance above this level from here on out, right? Once you're flagged as a pattern day trader, that is it. You are flagged. There's nothing they can do to remove that designation from you. You can open an account at another brokerage firm, but I don't want to be moving my money around, you know, every 6 weeks, right? If this is a problem for me, okay? So I need to really learn how to swing trade well and then build my account up to a position where I have enough capital to start taking some of the day trade setups because they are riskier. You do have to understand that. You shorten your time period, well, there's a lot less time for the signals to play out, right? And there can be more traps. So let's look at an example of a swing trade and how we use the swing trade signals in a stock like Netflix, okay? And we start at a very broad range of time here. We're looking at a very long time frame chart. The first chart we're going to look at is the monthly chart, okay? Then we're going to look at the weekly chart for more accuracy. And as we go through this, what you'll see is that we start at these kind of broader time frames and then work our way in to smaller and tighter time frames. And each level of time frame that we use provides us another level of confirmation that our setup is actually strong. Okay? So before we jump into that, does anyone have any questions about anything that we've gone over so far? I want to make sure that we're all clear before we jump into the actual trading plan part of the presentation. No? Okay. Great. So first, let's look at the monthly chart in Netflix, okay? So this is going to be the widest time frame that I use. And what we can see here, settings from the cloud. That is actually a great question, Rodrigo. So when we use the Ichimoku Cloud, and for most of you out there, I would imagine that your trading platform has the Ichimoku Cloud, okay? Because as I sit here and think of the main big discount brokerage firms, Thinkorswim, Trade Monster, Interactive Brokers, Trade Station, they all have the Ichimoku Cloud, okay? And if you don't have a broker that has the Ichimoku Cloud, you can use the same thing that I use to make my charts here, which is called TradingView. And they're a free, tradingview.com. They're a free online website that you can use to look at price charts for stocks, and they have a whole suite of indicators and tools that you can add to those charts. It's all free. They do charge, I believe, some small subscription fee for some of their premium features, but we have no relationship with them. If you buy it or not, it doesn't really matter to me, okay? But freestockcharts.com is also going to give you that same type of information. I don't know if Metastock has it. I don't know off the top of my head, but the cloud is very accessible, right? But what I really want to answer your question, the settings that we use are going to be the default settings that are already set up in your platform, okay? So if you go to tradingview.com, if you go to your Thinkorswim platform or your TradeStation platform or your Trade Monster platform and load up the Ichimoku Cloud, you know, the colors are, you know, might be different, the colors of the lines might be different, but the period lengths of the lines, and they will let you change them, are going to be whatever the default settings are. A lot of Ichimoku Cloud practitioners and academics who have taken a look at changing those times to see if they get better results basically ran through a ton of back testing, a ton of work, just to come to the conclusion that it doesn't really matter, right? Or even that, you know, it's better with the default settings, right? The results did not really change too much by changing the period lengths of the different components of the cloud. So you're going to want to just use the default settings, okay? So let's take a look here again at the monthly chart here in Netflix, okay? And what we see here is that Netflix was trading in a relatively wide range, highs of 489.29 and lows of 299.50. And the action inside of that range is relatively choppy. Now, like you said again, it is a pretty wide range, but what we're really looking at here is that Netflix on the monthly chart is trading above the cloud. Both of its moving averages are also above the cloud, and the cloud higher, okay? So on the monthly chart, we would say to ourselves, okay, Netflix looks bullish, all right? So with Netflix looking bullish on the monthly chart, we then take another level down and take a look at the weekly chart. So what do we see on the weekly chart here of Netflix? The stock is making higher highs, higher lows, and broke the Ichimoku Cloud on the weekly on February 4th, 2013 at 181.60 and has been above the cloud since. Actually, in the very end here, it starts to trade below the cloud. But any of the time that the stock is above the cloud on the weekly, I can only look for long swing trade setups in Netflix. Okay, I can only look for long swing trade setups. As soon as this develops back here, this break of the cloud happens back in February of 2013, I know that from that point on, I cannot get short Netflix as a swing trade. Okay, if I am doing that, I know that I'm trading counter trend and that the probability really isn't in my favor. Okay, if I'm a type of trader that likes to trade counter trend, that's great, but I truly believe, and here at Keen on the Market, we truly believe that the best probabilities lie with the trader who tries and follows the trend, not the trader who tries to fight the trend. Okay? So once this happens, once this development happens here, and throughout this entire time, all the way up until here, where we go back inside the cloud, nothing but long setups as swing trades, right? And that goes from February of 2013 all the way out to, what, November of 2014, okay? So for over a year in Netflix, there were no short swing trade signals for over a year in Netflix, okay? So once I know that I am only looking for long signals with the stock above the cloud on the weekly chart, I then start to look at the daily chart for breaks of the Ichimoku Cloud. The breaks of the cloud on the daily are going to provide me my actual entry signals. That's going to be the trigger for the trade, okay? Since the weekly is only bullish, I'm not looking for any short positions on the daily chart, okay? So I'm only looking for breaks of the cloud to the upside, meaning the stock was below the cloud or inside the cloud, and then it traded through the top of the cloud and is now above it. That is my entry signal, all right? Any of the times that the stock sold off below the cloud, and it only happened a couple times here and throughout this region here, well, I could take short setups there, but I know that it's not a high probability setup because the weekly does not agree, okay? So if we take a look here, we got long signals via upside cloud breaks on 4/23/2013 at 216.99, July 1st, 2013, 225.80, July 8th, 2013, 233.34, and on January 23rd, 2014 at 388.72, okay? All of these signals would have played out for profits, right? And we can see there was 4 signals across this period of time here, okay? All for long setups. If the stock was below the cloud on the weekly, then I can consider these short setup breaks of the cloud to the downside. But with the stock above the cloud on the weekly, I can only look at the long setups that come across, okay? So how does this play out? Well, when we're below the cloud on the daily and above the cloud on the weekly, there's no setups, okay? That's going to be when I completely disregard anything that's going on the daily chart. I can move on to something else, right? There's going to be no setups whatsoever with stock below the cloud on the daily but above the cloud on the weekly. The agreement that I'm really looking for is between the daily and the weekly. The monthly only provides another extra level of confirmation, okay? Is that making sense? Everyone, do you understand how when the weekly is looking very bullish that I could take short setups in the stock based on signals from the daily chart, but it's not going to be a high probability setup because that levels of agreement are not there. The levels of confirmation that we're looking for are not present, okay? And then once we find ourselves in areas like this where they're disagreeing with each other, I know there's no trade. I could take a long signal here. If the weekly is still above the cloud, I can use this as a signal to re-enter right here in this area. But with stock below the cloud, there's nothing for me to do there. There's nothing for me to do there, okay? So let's see how this played out. Oop, then I have to switch back from the pen here. So let's see how this played out. This is just for Netflix. In the past 3 years, we got 6 signals using this setup where the weekly chart, daily chart, and monthly chart are agreeing, and the cloud setups look strong. We got 6 signals, 5 winners, and 1 partial winner. What does a partial winner mean? Well, that means that it hit more than 1 profit target and then was stopped out at break even. So every single signal over the past 3 years using this system was profitable. Okay, now you might say, hey, that doesn't really seem like that many signals. I mean, 3 years and only 6 trades. I want to be a little bit more active than that. Well, this is just one stock, right? This is just one stock in Netflix, and we looked at 6 or 7 different symbols, and really any momentum name can work for this type of strategy. So, I take 6 symbols, and if I'm getting 2 trade signals a year in those symbols, well, that's 12 trades a year. That's about 1 swing trade a month, right? That puts me pretty much in the area that I want to be at in terms of building out my swing trade book or my swing trade portfolio, okay? So, like I said, this is just one example, and we're going to show you guys how to use stock or options to swing trade the positions in all of these stocks, right? And I can build a pretty healthy and pretty robust swing trading book using only this setup, but using many different stocks like we're looking at here. Right? I mean, do I really care if I have on, 12 really strong signals in a year in 6 different stocks, or do I need to have on, take 40 trades in a year in 40 different stocks, right? I want to use the ones that are the highest probability setups, right? If I know that I'm going to get 6 signals or 2 signals a year in every stock, or maybe more, I mean, who's to say that we don't get more than that? Then, and I know that those are the highest probability signals that I can get, why would I even want to mess with other symbols, right? If I'm looking to build this type of swing trading strategy, why would I want to put any capital in names that I know are not going to be the best setups, right? Because we've traded all these names, and these are the stocks that we've found to be the strongest names to trade off of the cloud. Okay. What about day trading signals? So we looked at an example of that Excuse me. So we looked at an example of that already in Apple in the first couple of slides here. The day trading ideas, I can use the same type of concept as the swing trade ideas for the day trades as well. So I'm looking at the 5-minute bar. Well, I can back it out a little bit more and look at the 5-minute bar. Maybe I go to the 4-hour bar and then the daily, right? And if those all agree with each other, then I know that it's a much higher probability setup, right? Does that make sense, Sam? So it's all about finding the levels of time frames that you're going to use depending on what type of trade you're going to do, right? So for swing trading, it's daily, weekly, monthly. For day trading, it might be slower, right? Or it might be faster. It might be 5-minute, 4-hour bar, daily bar, right? Does that make sense? It's all about fitting it into the time frames that you're looking at based on the type of trade that you're trying to take, okay? So let's take a look here at a swing trade signal that we had here in Apple. So this was right after earnings, okay? So you see here that we had a couple of cloud breaks in Apple ahead of earnings here throughout these regions right here. So those are typically ignored because they're so close to the catalyst event, right? I don't want to be entering in a swing trade right here in Apple ahead of earnings because I know that even though I got a break of the cloud to the upside here, I know that it's probably going to be pretty difficult for me to take that trade with confidence and know that my stop is going to hold with the catalyst coming up, right? Apple can sell off $40 on, or not, maybe not $40, but Apple can sell off, you know, a huge amount on earnings and take out all these levels, right? So what I want to wait for is the signal in the catalyst after the catalyst event, which is what we got right here. So we actually sent out a trade alert signal here when Apple closed this bar here, this red candle above the Ichimoku Cloud, okay? And that was an Apple long swing trade signal, all right? So how did we trade this long swing trade signal, right? There's different ways to go about it. I can trade the stock or I can trade options. If I'm going to trade options, I have a whole nother set of questions that I need to ask myself. Do I want to be long calls? Do I want to sell put spreads? Do I want to be long call spreads? How much capital do I want to put into this trade? What exactly are my entry criteria here, right? What exactly do I have in my toolbox? So we talk about how the options market is basically just a big toolbox, and I can take any type of strategy I want out of the options market and apply it to this type of signal to then develop the most efficient and effective way to take the trade based on what my market view is, okay? So let's take a look at some of the signals that we sent out here using this this trading plan, okay? So the signal came across with Apple closing at 115.69, okay, at 115.69 with a 106 stop. So that's a stop of $10 and or that's a stop of $9. So I set my profit targets like this: 25%, 50% of the stop, 25 at 100% of the stop, 25 at 150% of the stop, and 25% at 200% of the stop. This alert has already hit 2 targets, okay? As far as the options trade signal goes, when we sent out a signal to buy the July 130 calls for $3.45 with a 50% stop with these profit targets. Target 1 was hit the very next day, and all of the other targets have already been hit, okay? So if a trader would have taken that Apple 130 calls on our signal at 345 with that $1.75 stop, the trade breaks down like this. They'd risk $175 per one lot for a potential unlimited reward. With the exits at the targets that we designated using the trading plan, if a trader would have bought 100 lot of these calls, they would have made 23 grand in just a couple of weeks. If they would have bought a 50 lot, they would have made $11,500, and if they would have bought a 20 lot, they would have made $4,600 in just a matter of a couple of weeks here using this trading plan, guys, okay? So I want to take a couple of questions, but before I do, I want to make an offer for you guys. We're holding a 2-hour boot camp on how to swing trade using stocks and options, Amazon, Apple, Facebook, Google, Netflix, Tesla, and Twitter, okay? Regularly, we charge $4.99 for this. We only have 35 spots left. It is a live workshop on February 26th at 8 p.m. Eastern Time. We're going to talk about how you can use history and previous setups to plan better potential trades, meaning if you don't trade these stocks, we're going to teach you how to go back and look and determine if the stocks that you do like to trade will fit into this trading plan. How to swing trade stocks, a better way to do this using options and stock using smarter stops and better profit targets. Also, learn how to use the options market for more conservative or more aggressive traders, right? A lot of people don't realize that the options market is oftentimes a more conservative approach than trading the outright stock, okay? Also, how to trade the best names in the business with the best possible setups. We're going to show you guys exactly why we like these names and how the setups work on a day in and day out basis. And we're going to offer this to you guys for $97, which is 80% off our regular price here. Optionsonthefloor.com/trend, $97. This is a fantastic, fantastic value for you guys. I really, really think you're going to enjoy the course. This is the first time we've presented this swing trading plan. It'll be presented by both myself and our head trader, Andrew Keene, and we're going to go through all of these different things in detail. And like we said, it's going to be a 2-hour-long workshop. You'll walk away with not a single question on how to take these type of swing trade setups and build a swing trading portfolio that you can invest your capital in if you're not someone who's able to do a day trade. Okay? So does anyone have any questions about this course that we're offering here, about anything else that we just talked about? I think we have just a few more moments left here. Any questions at all? Like I said, it's going to be a comprehensive overview to our approach for swing trading using the Ichimoku Cloud and using other indicators and signals that we use. And we've since we've written this trading plan, like I said, that Apple signal has been the only one that has come across, but it has been incredibly profitable. I actually traded it with an even more complex strategy that we would cover in the course using something called a risk reversal, and I am up a very good amount of money in that. I put that trade on for a nickel a couple of weeks ago, and today the spread was worth $4.90. So it went from 5 cents to $4.90 using this signal in Apple. How much of the course will I teach? Well, it's going to be Andrew and myself going through things, answering questions, and going through the workshop. I mean, we both teach it about an equal amount of it. What options platform do I like? I personally trade through Thinkorswim. I personally trade through Thinkorswim. So if that's something that you like to use as well, I believe that there's a lot of really good platforms out there. My preference is just Thinkorswim. Do I buy out-of-the-money options for swing positions? I can put on a number of different approaches. The course will talk about how to trade out-of-the-money options, in-the-money options, or how to sell out-of-the-money options for profit using in a swing trade, right? So I can get approached from both a long premium or a short premium standpoint. George, I highly doubt you've taken this one in the past because we have this is the first time we've ever done it. The first time we've ever done it. We're going to be doing it live on February 26th at 8 p.m. Eastern Time. So any other questions that you guys have? Any other questions? These swing trade signals have been working out really, really well. Like I said, the Apple trade has been incredibly profitable. And in that, in the plan that we have here, the Apple trade actually called for, not only just a equity position and a long call position, but we also talked about how you can use a really cheap spread like a call butterfly to take advantage of that signal, or how to sell a put spread to take advantage of that signal and be short premium, putting time decay in your favor, right? A lot of traders don't know that. A lot of people who are not familiar with options don't know that you can make money just by the passing of time using the options market, but it can be kind of dangerous if you don't know what you're doing. It's easy to blow out being short options, but not the way that we trade them. We only trade limited risk positions, and we're going to talk about how to use the swing trade signals to put on trades like that benefit from time decay. Yes, the same ideas can be applied to Forex. The same ideas can be applied to Forex as well. We're going to be talking about this in the frame of equities, but the same type of technical indicator can be used, and the same type of analysis method can be used in the Forex market as well, yes. So any other questions? Any other questions? Yes, this course is good for, like I said, it runs the gamut from beginners to absolute options experts, right? So if you're an expert trader, you probably would benefit greatly from the analysis and explanation of how to use the more advanced option strategies to take advantage of these signals. If you're a beginner, well, excuse me. If you're a beginner, well, we're going to talk about more conservative ways to play with options and the kind of simpler, easier to follow setups as well, right? And they all kind of build on each other as well. So even if you are a beginner, you'll probably learn a lot about using options to take these types of strategies and apply them in different ways using different types of option strategies. No, there are no further charges after the course. One-time fee. There's nothing recurring whatsoever. You come to the course. We do it live on the 26th, and then you get a recording afterwards. You get to keep that forever. You get that's yours forever. If we use 10-minute charts, what other time frames do I recommend? Well, like I said, for our plan, we're using 5-minute charts. I mean, the presentation, the course is going to be in the frame of swing trading, but like I said earlier, you can kind of shorten up all the time frames in the plan to basically, tweak it to any type of strategy that you're already using, right? Yes, it is. Yes, this is the discounted offer here for the course. Like I said, we're only going to sell 35 more spots here at this price level. After that, jacking up the price, $500. Thank you, Rodrigo. See you there, Pete. So any other questions? Any other questions, guys? Any other questions? I think we're almost out of time here.
Yeah, I think we have a little bit less than a minute left. So if you want to maybe take one or two more questions,
sure.
To go. Yeah.
Someone asked me what I would do in Twitter. So I'm going to break through this really quickly. I can do this really fast. Exactly how I did with all those other setups. So let's start all the way out at the, oops. So let me start all the way out here at the monthly chart. $3 years back. Actually, Twitter's a bad example because it hasn't been around long enough to basically do this. But with Twitter on the weekly here, what we see is that it hasn't been around long enough to really develop a full cloud yet, but it would be trading inside the cloud. So technically speaking, any trade that I take based on the daily signal in Twitter is going to be a trade that isn't backed up by the weekly, right? It's not going to have that extra level of confirmation. But with Twitter above the cloud here, after it gapped higher on earnings here, I would only be looking for long setups. Stocks above the cloud, lagging indicators above the cloud, the 9 and 26 period moving averages are above the cloud, the stocks above both of those, and the cloud slopes higher in the future here. So right now for me in Twitter, I know that I'm only looking for longs or looking to play it flat. Everything else is not supported by the weekly, as it's in neutral territory. So I know it's not my 100% best all-in looking setup, okay? Alrighty, so I would love to go over some more stocks with you guys, but we, I think, are out of time here. So thank you all for joining us today. I appreciate it. I hope you guys found some value out of the presentation. And if you have any questions whatsoever about anything that we talked about or about the course that we offer today, please feel free to send me an email at james@keenonthemarket.com and be more than happy to get back to you.